Hello, welcome to the European Open briefing for March 27th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So the big news at the start of the week is the what happened with the healthcare bill in the United States on Friday. The Republicans decided to pull the legislation before it was even voted on, as there was not enough support for the vote to pass through, and that led to a sharp sell-off in the US dollar. The dollar is currently at around 4 months lows, and this setback for the Trump administration has given rise to risk aversion, given its implications for the future policies such as tax cuts and so on, whether or not they would be able to be approved by Congress. And as a result, we're seeing a big jump in other currencies such as the yen, euro, and the pound. Gold is also benefiting from the risk aversion. And in commodities, oil continues to struggle this week. There was a meeting over the weekend between OPEC and non-OPEC countries, but there was no concrete commitment to an extension of the deal, and that led to that added further pressure on prices this morning. But let's start with the dollar. We can see here in the chart the dollar index has slipped below the 50-day moving average, and it's hit the lowest since right after the US elections in November. As I mentioned, the House Republican leaders decided to pull the vote at the last minute, as there was not enough support within the Republican Party to vote in favor of the bill, and this has raised doubts about whether or not President Trump will be able to push through his economic agenda, mainly consisting of tax reforms and infrastructure spending. Although with this bill having failed, Donald Trump has said that he will make tax reforms his priority now, so that could potentially lead to perhaps the tax reforms coming through much sooner than expected. Against the yen, the dollar is also struggling. It hit a 4 months low, 110.14. That's low since mid-November. The yen is doing very well this morning, as on the back of that risk aversion, despite a very dovish summary of opinions from the Bank of Japan's March policy meeting. In the summary, the main statement was that the members agreed that it will take considerable lengths of time before the bank will need to change its monetary policy. And gold is also benefiting from that risk off. Here in the chart we can see it rose to a 1 month high, $1,259 an ounce. In European currencies, both the euro and the pound are sharply up. We had regional elections in Germany over the weekend, where Angela Merkel's CDU party increased their majority. So that gave the euro an additional boost. Of course, last week we had the further boost from the French election, where Macron was ahead of the polls. The pound is also up. It's at a 7.5-week high, 1.25, 79, currently at around 75. On Wednesday, we have the official triggering of Article 50, so we will likely see further volatility in the pound around that time, but for now the pound is up on the back of the weaker dollar, but also we've got slightly improving fundamentals in the UK economy, given the inflation and retail sales numbers out of the UK last week. Let's have a quick look at commodity currencies, because they're not doing as well as other pairs, despite the dollar slump, and that's mainly due to these are also Aussie and the Kiwi are also considered to be risk currencies, and given the current risk-off in the markets, they're only modestly up against the US dollar. The Aussie in particular, here we can see in yellow in the chart, has been mostly flat since last Thursday, and that's mainly due to weakness in metal prices such as copper, steel, and iron ore, where there's concerns about whether or not demand will hold up over the coming period. The New Zealand dollar is doing a little bit better. It's up by around 0.3, 0.4%. As it's not as badly affected as metal prices as the Kiwi. But let's move on to oil now. We can see it had a sharp open lower today. OPEC and non-OPEC members, the best they could agree was to meet again in April and to review then whether or not an extension to the current output cap deal would be needed. So for now, that's weighing on the markets. It is possible they may yet agree to an extension, so that would obviously be positive. But for now, oil prices are struggling. US crude is they're at $47.50 a barrel, and we had another rise in US output on Friday, according to the Baker Hughes oil recount, where they rose to the highest again since 2015. It's going to be a quiet day. The main data out later today is going to be the German IFO business surveys, and in terms of speakers, the Chicago Fed President Charles Evans will speak later in the day. But other than that, it's a relatively quiet day. That's it from me. Thank you very much for watching, and have a great day.